we just came across an exceptionally well put together article on AMC, and in quotes, AMC is set up for a short squeeze should strong buying forces continue. Yes, it's looking like a short squeeze could be around the corner, guys, and this article does a beautiful job of explaining to you exactly why that is. So we're going to take a look at this article. We're going to read parts of it. We're going to confirm the data that is in this article with the actual Ortex data and talk about what I think is right around the corner, guys. So let's get into this video. You guys know the deal. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. And if you guys want to come trade with me live in real time as well, link down below in the description of this video. So first things first, guys, this article, if you guys want to look it up for yourself, it's not going to be hard to find at all. It's called What's Behind AMC Stock's Recent Double-Digit Surge. AMC stock had a very bullish start to December. Here, we'll dive into what's causing this movement and take a look at AMC shares prospects moving forward. And really the key points of this article says skyrocketing volume, trading halts, and meme euphoria marked AMC's start to the month. AMC is set up for a short squeeze should strong buying forces continue. Looking ahead, new short sellers should be extremely cautious when betting against AMC, especially given the stock's sky-high borrow fees. And getting into the first couple paragraphs of this article, it says, a cheery start to December. Cherry, little bit different there. A cheery start to December. Cherries are good too, though. AMC stock started off the holiday season on the right foot. Shares of the movie theater chain were up 13% in a bullish December 1st trading session that was marked by a volatility halt. At one point, the stock was up a full 24%. For one, not a lot of stocks are doing that in this marketplace. And for two, I think that in and of itself is a sign of what is to come. But we'll continue on with this article and then touch back on what I just said. So some analysts were scratching their heads about the sudden surge. There was no significant company or even industry related news to speak of that would have triggered this bull run. More likely, this spat of buying was at least partially spurred by heavy options activity. Call options were purchased at a rate 3 times higher than the previous 20-day average. So that means, let's just say for easy math here, there's $1 million of options being placed on AMC every day for the past 20 days, and then you get 3 million worth of options placed on one day. Relative to, recent history, those past 20 days, if you all of a sudden get 3 times the call activity, that's showing you that hedge funds are very bullish. This kind of option activity is not done by retail investors. These were hedge funds that were making these bets. And when hedge funds make these bets, there's usually a reason behind it. There's usually expectations of a positive catalyst. There's usually earnings. There's something that is making them buy these options, especially to get the stock to go up 24%, mostly based off of options. You've seen a lot of activity last week with the options, and that is telling you something, guys. If there's one thing you take out of this video, it is that for the rest of your life, when hedge funds just randomly start buying a bunch of options, well, there is a reason behind it. There is a reason why they are all collectively starting to buy these options on one individual stock. It does not even have to be AMC, but typically if you follow that money and you can be quick to it, there's usually some good things to come, the next couple of days and the next couple of weeks after that, guys. So let's continue on. It says, as noted by Bloomberg, AMC calls expiring on Friday, December 2nd, mostly with strike prices of $8, $8.50, and $9, were the most traded contracts during the December 1st trading session. About 550,000 calls changed hands, which is more than triple the 20-day average of 163,000. AMC's surge shouldn't come as a surprise. It certainly isn't news that AMC has been the target of massive short selling in recent months. A month ago on this channel, we wrote an article saying AMC was on the verge of a short squeeze. Shares were experiencing a conflux of factors such as elevated short interest, soaring borrow rates, and millions of failure to delivers that could together precipitate a squeeze. Currently, there is about $771 million worth of short interest in AMC. That's nearly 100 million shares worth that will need to be purchased if short losses start to become unacceptably high. And you can see the chart here. of the actual borrowed shares, and it has definitely been trending up after a bit of a silent period in late November. It's definitely back on the up and up. Now it says AMC's borrow fees stand at nearly 40% annualized, while still a drop off from the nearly 100% borrow fees that shares were commanding in mid-November. A 40% annualized borrow rate is nevertheless exceptionally high. Additionally, AMC's failure to deliver rate surpassed 1 million per day at various times in October and early November. Worth noting here is that if a short seller intends to deliver an asset as soon as delivery restrictions are removed, the SEC grants them 35 calendar days following the settlement day in which to close out the position by purchasing the non-delivered securities. Therefore, after this 35-day calendar period, traders could expect to see a bump in share price as late deliveries are made. Indeed, late deliveries may be one factor helping to boost AMC shares right now. And it says, what's next for AMC? AMC is still down sharply in what has been a bearish year for the markets in general. Shares of the theater chain have accumulated losses nearly 70% year to date. Meanwhile, the short sellers have accumulated about 1.73 billion in 2022 mark-to-market profits. However, AMC's recent Q3 earnings rally, during which shares jumped nearly 50% in just a few days, combined with a very bullish debut in December, shows that AMC shorts are still in danger of getting caught up in a short squeeze. The situation is especially precarious for new short sellers who have entered short positions at very high borrowing rates. Upward momentum could cause borrow rates to once again approach 100%, at which point we'll likely see many short sellers forced out of their positions. They are predicting another short squeeze. Now, when you look at the chart of AMC, it definitely supports what this article has been saying, and my call even for the stock to be going higher as well. If we take a look at what has recently been happening, we've talked about it many times here on this channel. We broke out above major levels. We're retesting upside levels instead of retesting the downside levels, and really over the past 2 weeks, the 50-day moving average has been a focal point of these videos. When you are above this, I gotta be bullish. If you are under this, I gotta be bearish, because typically when you break the 50-day moving average, you tend to get about a 100% rally, at least what we have seen in 2022, but even in 2021, it was the same thing, right? But even granted, in 2021, there was more liquidity, less issues with the Fed, and less fear in the markets. You've seen much bigger rallies upon breaking the 50-day moving average in 2021, but still in 2022, it has been a rock-solid indicator, and you have been right 100% of the time if you bought the stock when we went above the 50-day moving average. And still, even now, if you had broke the 50-day moving average and bought the stock on that same day, you'd still be up about 3%, even though we lost about 7.5% here today. And at the peak, you would have been up about 32%. The average run is about 100% after the break. So I think just that in and of itself, you're due for a lot more upside. Now, I do want to remind you guys, today we were down. It even just reset. I don't know why I was saying 7.3%. We were down almost 9% today. That makes a little bit more sense, down about 8.81%. But even in the grand scope of the last 2 weeks, we're still in roughly this mid-range that we have been trading at over the last 2 weeks, still well above the 50-day moving average, and more above the 50-day moving average than we have been in a while, right? Out of the last 2 weeks, you've only been higher than this price a couple of days, 2 or 3 days. Most days have been right on that 50-day moving average. So one, you got a lot of cushion before the 50-day moving average. Even if tomorrow is down another 8%, you're still not going to be at the 50-day moving average. You got to fall about 9% to get back to the 50-day moving average coming tomorrow or by the end of the week before it would start to look more 50-50, right? If you fall under the 50-day moving average and close there by the end of the day, that's going to be a negative thing. I can't forecast if that is going to happen. I don't imagine tomorrow is going to be a super red day again. I do imagine tomorrow will be a green day. That's what typically happens after these really bad days in the markets in 2022, especially since we don't have a lot of economic data. We don't really have earnings that are going to move AMC tomorrow. You don't have a lot. Now, coming on Thursday and Friday, you're going to have more data, in which we've talked about many times here on this channel, and you also will have GameStop earnings on Wednesday that will make things quite volatile, but I do think we're much more skewed to this upside move just simply based off of the charts and based off of the rally that we have seen above the 50-day moving average. It looks like there is a lot still left in the tank, and honestly, if you didn't get in on this last rally, then, and by this last rally, I mean, if you pull up from the lows of 2022 until now, I mean, you're still up 57, 58%. If you didn't get in on that, I think this would be a good chance to load back up and to ride that break of the 100 and the 200-day moving average again, especially if you're trading options. I do not endorse that. I'm not a financial advisor, but you could definitely make a pretty penny trading the options to the bullish side right here and right now. Now, let's go ahead and switch gears, look at the Ortex data, and we can see the positive order value for the day was 66%, 76 institutional option activities today, meaning just orders in general, 76 of them, worth about $5 million. This is a lot more than we are typically used to seeing for AMC. Usually we're roughly about $1 million as of the last couple of weeks, but it has definitely gotten bigger over the last couple of days. Short interest up today by about 800,000 shares, now sitting at 20.77%. Cost to borrow average at 32.81%. Cost to borrow maximum at 58.54%, and cost to borrow minimum at about 16%, guys. So long story short, I could really go on and on. Everything looks very bullish with AMC still, even after the drop that we are seeing today. Now, if we see another, 10% drop or something tomorrow, we might be making a different video tomorrow. But as of right now, that's not my base case expectation. My base case expectation is to probably come back up and to retest this, call it $8 level some point tomorrow. And even over $8, that's where I would like to get a little bit more bullish in my positioning as well, guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns. Like I said, thank you guys for doing that. I will see you in the next one.